Let's get started.
Welcome to the Financial Purpose Podcast. All opinions expressed by me or guests of the podcast are solely our own opinions and do not reflect the opinion of Life Moves Wealth Management. This podcast is for informational purposes only and should not be relied upon for any investment decisions. Clients of Life Moves Wealth Management may maintain positions in the securities discussed in this podcast. Hey, welcome back to the Financial Purpose Podcast. I'm your host, Dale Shafer. This is episode 85. A couple episodes ago, I talked about where your next dollar should go, and it was very simple, very easy to follow, even came with a flow chart. That's how direct it is and kind of easy to move through each of the steps and, make your money work for you and put it to good use. But I was thinking over the past week a lot about, and even in some conversations, that next dollar, really what that came to is kind of the next level of that conversation, which is what's the opportunity cost if the dollar goes here versus if it goes there? So quick way to think about this. If you suddenly, by whatever means, had an extra $50,000 at your disposal, what would you do with it? And for a lot of people, myself included, I think, well, I could buy this, I could pay this thing off, I could make this investment, I could make a list of the things I would do with 50,000 and then, prioritize them and then whatever. But the most helpful way to think through that question is not only what's the best use, but what's the best use from an opportunity cost perspective. And so opportunity cost, when we think about it, is one of the most overlooked decision-making criteria that we can use. It's overlooked because it doesn't show up anywhere. It's easy to ignore. It's easy to kind of ward off or explain away or whatever. But I want to talk a little bit today about what it is, why it matters, how it affects your strategic financial decisions every day, not only for your personal finances, but absolutely in business. And in business finance and even business strategy, opportunity cost is a huge factor that needs to be considered. So real quick, let me give you a definition of opportunity cost. It probably is a little bit on this is kind of an obvious type thing, but it's basically the loss of a potential gain from another alternative when a different alternative is chosen. So it's basically, what do I give up if I do this thing instead of that thing, is what it means. And it's not just a finance term. It's a really great decision-making principle, and it applies to not only money, but time, energy, and focus. And this one is a little bit of a devil when we start to think about it in terms of time and energy and focus. So the challenge with opportunity cost and thinking about it is it doesn't show up on any of your financial statements. It's not a true number. It can be sort of difficult to quantify in that regard. And it's again, unless you're specifically tracking it and writing it down and know what your opportunity costs are, it can be very difficult to see show up anywhere. And it requires forward thinking, often involves a trade-off. That trade-off may not be immediately painful in some respects, and you may not notice it for a while. And typically it's something that you notice on maybe more on a post-mortem basis. That's when you discover it, unless you're really proactive and you think about it before you make the decision. So that's what I want to talk about today. Now, in the prior episode where I talked about what to do with your next dollar, I mentioned that every dollar has a job. Every dollar, it has some sort of purpose. Even money that's going into savings, those dollars are sitting for a period of time, but they will be put to work at a later time. Remember, I've said before, any type of savings account is simply just a future spending account. It's going to be used for some purpose at some point in time. A savings account is never just a bank of money that just sits and never gets messed with. It will be used for another purpose at another time. So when I talked about where your next dollar should go, building the cash reserve was one of those items, one of the very first items for building the foundation. And then once you have your cash reserve in place, then every dollar above that cash reserve target needs to be put to work. And that's what we're talking about here. So when I talked about the $50,000 example, it would be very easy to say, let me take $50,000 and let me make a principal payment on a mortgage or on a business loan or on a personal loan, or let me pay off some credit cards or something of that nature. And what you want to do is look at that $50,000 and just say, if I pay this off or apply this money toward it, what does it benefit me, or how does it save, or what cash flow does it free up, because I will no longer be making debt payments, or I'll be making a lower debt payment or something of that nature. So that's one side of the equation. The other side of the equation is, if I take this $50,000 and instead I invest it in the capital markets, meaning stocks and bonds, or Bitcoin or gold or treasuries or CDs or whatever you're investing in, do I make a down payment on a rental property that I can then rent? Do I buy a piece of equipment that we can then monetize to bring in additional revenue in this particular category or product line? Or, do we upgrade our computer systems or whatever it is? Think about what's the best use of the money. I can invest it. I can pay debt. Opportunity cost. So, for example, if your mortgage is at, say, 3% and your balance is more than $50,000, is that the best use of that $50,000? Possibly. Or do you take the $50,000 and instead say, if I can get a return of 7 or 8% or 30%, depending on, and I'm not talking about stocks with the higher the number. I'm talking about, do I invest in my business and get a higher return? That's where you're going to see the larger numbers show up in a lot of cases. Stock market, since 1928, you can, if you just put it in the S&P 500 and leave it long term, you're going to average somewhere in the neighborhood of about 8 or so percent per year, just for the money sitting in the S&P 500 index fund. So you could do that depending on your time horizon. What do you do with that money, right? So the opportunity cost is, if I pay off the debt, so let's say I pay off debt that is at 24%, a credit card. I will have a hard time earning 24% or better. So in that case, you're actually going to benefit from paying that off, right? So you want to think about these in terms of opportunity cost, not just in terms of, I have 50,000, what equals 50,000, and what do I think is the best thing to do? You're working with where actually is the best strategic place to go. And so that's the real question there is, what's the strategy? What am I giving up if I make this decision versus making this decision? And then that's where you go. Now, the other thing that shows up with opportunity cost, especially in business, is that as a business owner, especially when we're small, and this is, if I had a mirror in front of me, I would be talking to myself, because I am just as guilty of this as any other business owner. But as a business owner, it's easy to catch ourselves doing low value tasks that can cost you money the longer that you're doing them. So, for example, I thought about this recently because I wanted to express a certain thing in graphic form, and I am not, my brain does not do marketing. I'm not creative design-wise. I'm creative behind instruments. I'm not creative behind a computer and a design board and drawing and things like that. So I'm very tactile creative. I'm not very artistically creative. So, but I knew what I wanted for this graphic. I can fire up my Canva subscription. I can, work with Chat GPT to come up with a template, and then I can plug it in, whatever. I can come up with it, or I can give Chat GPT enough prompts to be able to get close enough to what I want and whatever. And that's only going to take me 10 minutes, 15 minutes, 20 minutes, whatever. What's 10, 15, 20 minutes? It's not a big deal. What I find every time is it takes me longer than that, because something's not right and the font needs to be adjusted and the colors aren't quite right. And then when I, put it into whatever its destination is going to be it the website or the social media account or something like that, something's not quite right or a word isn't spaced, whatever. And so then I go back and I have to redo it and whatever. And okay, never 20 minutes. This is more like an hour or two to do basic things like that. So when I think about that, and I think about what my hourly rate is it possible that I could take that 2 hour time that it takes me to, try to do this graphic image, and can I go earn my hourly rate so that I can pay somebody on a, kind of one-off basis to do these kinds of little design work things for me? And then my risk is we have to go back and forth a few times to, to get to something that I want, but somebody else is doing all the work. I've outsourced it. It's kind of like with this podcast is a great example. Josh about a year ago was like, hey, I can do this better than you can do it, and for less time and quicker and more efficiently and get a better reach. And he's been right. And so for the past year, that's been a godsend. I outsourced. It used to take me 5 to 6 hours to do this podcast, to record it, to edit it, to make the short videos, to put them all on to YouTube, and then to schedule all the social media, and then to write all the descriptions and all that stuff. I come in, I sit down, I record, I leave. Josh does it and does a fantastic job, and it's been outsourced. And so that was an opportunity cost equation that I went through, because I was, it's like, nah, I could not pay anybody and just do it myself. But there goes my whole Monday afternoon or Tuesday afternoon or whatever day I'm recording. And in the meantime, I got the time back, and now I can actually go earn the money that I used to pay the person who's doing all this work. So that's how you want to think about it, right? In business, another place where we lose this, and this is like the easiest one, is for business owners who are not trained to do accounting, or maybe didn't take an accounting course in their degree, or maybe they didn't have a degree and they're just kind of winging it. If the business owner is sitting behind QuickBooks once a week, once a month, and it's taking forever for them to reconcile everything, and the transactions aren't ending up in the right categories, so then it messes up your P&L and your balance sheet and that kind of thing. Don't you think it might make sense? Let's just say if you, for whatever your service is, if you can calculate your revenue, and let's say your hourly rate is $300 or $400 or $500 or $1,000 an hour, depending on what you're doing. Don't you think it makes sense, if you're spending 2 to 3 hours a month on this project at your hourly rate, which could be $1,500 or $2,000, doesn't it make sense to outsource that to a bookkeeping service who you're going to pay far less than that, and they're going to do it right, because it's what they do every day, and they're going to know how to do it, and they're going to save you time, and they're going to make sure your books are organized and your profit and loss statement is in the right categories, and they're going to call out red flags based on spending or things that are showing up. And it's a great way to put some good financial compliance in place, because somebody else is looking at the accounts and putting them together, reconciling them, getting them in the right categories, all that fun stuff. So when you reach that point, you can say to yourself, okay, what could I be doing instead with this exact same amount of time that is worth more? You have to start by knowing what your time is worth. But this becomes a real pain in the rear, because there are times where, and this usually happens because my brain is the sharpest between 5:30 a.m. and about 11:30 a.m. That's when I should be doing all of my analytical work. That's when I'm best at crunching numbers. That's when I love doing financial reporting and financial planning and writing and calculating and things like that. After about 2:30, 3 o'clock in the afternoon, my brain does not want to see numbers. It doesn't want to calculate anything. It doesn't want to do any like kind of heavy lifting work. It wants to talk to people, and it wants to be in communication, and it wants to get distracted, with God knows whatever. And, you pick up the phone, and the next thing you know, you're doom scrolling, right? Because you're bored, or because you want a distraction, or you find something else to do. The trick there is you'd say, okay, with this time, how can I earn my hourly rate? Or how can I go meet a new prospective client? Or how can I follow up on somebody who is in the pipeline to become a client? Or how can I touch base with a client maybe I haven't talked to for a few weeks or a couple of months? How do I continue to move the business forward? How do I, maybe work in the business? How do I work on the business with that period of time instead of costing myself opportunity by getting distracted with something else? And that's really where it becomes painful, because when you start to get that anal about your opportunity cost and what your time is worth, you're going to find that you've got some white space. And white space, I'm trying to remember who it says, who said, I think it was Zig Ziglar said, if you want to meet the devil, have white space on your calendar. And that is a true statement. And if that's not Zig Ziglar and it's somebody else, please let me know, because it could be Jim Rohn. I'm not really sure, but it's one of those guys. If you want to meet the devil, have white space on your calendar. And that's what that means. It means that you'll waste the time, you'll cost yourself the opportunity to continue to grow, or to invest in yourself, or to invest in your business, or to invest in your clients, or something of that nature. So think about it that way. What could I be doing right now that would be the highest value? And if I don't do that, what will it cost me to do this other thing? And that's how you get down the road of thinking about opportunity cost in your time and in your focus. Okay. Emotional decisions versus strategic decisions with opportunity cost. This one's really tough, and it's the hardest one to quantify, because sometimes, as business owners especially, we have gut instincts that we are ready to fervently defend. And it's because our instincts are typically good enough because we've done it before, or we've seen something like this, or we've experienced it, or whatever it is. So we have a good feeling, a good instinct about what's going to happen. It is easy in those moments to run forward with a gut feeling without all the information, and then end up in a point where maybe you're not wrong, but maybe you're not efficient, or there might have been a better approach, or there might have been a shorter path to getting to where you want to go. I'm not saying a shortcut, but maybe a better way to get to where you're trying to go. It is also very easy when we're making these kinds of emotional gut decisions, especially if we're not willing to wait for fact, to do a case study, to do a little bit of research, to explore all of the options. We're just ready to run with whatever feels good. The problem with that is it's very easy in all parts of life to trade what we want most long-term for what we want most in the moment. And that's everything from, the extra scoop of ice cream, to the extra beer at happy hour, to staying up, a half hour later than you should to watch a show, or something like that. What I want most long-term is a great night's sleep. What I sometimes give up is watching the show and having an extra beer, or a glass of scotch, or an extra glass of wine with dinner, which I know isn't going to help me sleep well. Right. Same thing. If I get the munchies, if I stay up, and it's 9 o'clock and I'm like, man, I'm still hungry. Let me just go eat, something, whatever that something is that I'm going to eat, I know is not going to be helpful to my longer range goals, which is, hey, I'd like to drop another 10 pounds, and I'd like to be more efficient, and faster on the bike. And so to be faster on the bike, I need to have stronger muscles. I need to weigh less. I need to be in shape. I need to take care of my body. I need to be healthy. So it's easy to give up in that regard, what I want long-term for what I want in the moment. Same is true in business. It's very easy to take a quick job that you shouldn't take. You shouldn't take it. It's not the right fit. It's not the right client. Something about it isn't quite ideal. Maybe the person's not very nice. Maybe it's not profitable, and you think it can be. Maybe you just need a quick injection of revenue so you can take care of something like payroll or whatever, but it's not the right thing, but you're willing to do it anyway. The problem with those decisions is that the more of those we make, the quick fix stuff, the what feels good right now, it can set us up for long-term detriment, or even just diluting the brand, or costing profit margin, or getting into a low-cost job that ends up taking longer with more equipment or supplies or man hours or whatever it is than you planned for. And so you end up way unprofitable. And then you were better off not taking that revenue anyway. You have to really think about these strategic decisions, both in the short term and the long term. So in the short term, yes, it would be nice to have another several $1,000s come in for this project. In the long term, it's not at all what we should be doing. It's not who we should be focusing on. It's not who we're trying to target as our primary client base. It's not who is profitable for us or the types of jobs that are profitable. Maybe we've grown away from those types of things. You have to be strategic when you think about this and before you make those decisions. And again, this is an opportunity cost thing. Because short term, you take the job you don't want, you're taking yourself out of position to be ready for the one that you do, or even to recognize when there's going to be an opportunity for you to go find the one that you want. And it's all because you're tied up with something that's not profitable, not good for you. It's not a good fit, not a good client, that kind of thing. So you have to think about the opportunity cost of those decisions. And this is even just a great reminder for just basic behavioral finance, because we tend to focus on things we can see, like revenue in this case, or spending. And we ignore the invisible things like, compound interest or opportunity cost, or even just opportunity in general. So this is a really good reminder. Think, especially if something feels good in the gut, feels good, right here, there's going to be something that nags you in the back of your brain that says, maybe we should wait. And if you get the maybe we should wait, just listen to it. What's the worst thing that can happen? You're able to justify the decision and then you move on. The best thing that happens is the maybe we should wait little thing back here in your head is right. And you need to test what your gut feels is good. So there's no harm in stopping and pausing and doing this kind of strategic thinking. Other examples of where this shows up, especially in business, is, for example, choosing not to hire somebody that you need because it costs too much. The payroll, the taxes, the benefits, the extra computer, the extra software license, all of these things. Which, by the way, sometimes we don't think about all of those peripheral cost of hiring somebody. And you have to know, what does it cost me to onboard, train, and get fully up to speed, and under what time frame? And it's not just how much do I have to pay a salary and what are the benefits that I now have to pay, and I have to buy a computer. There's a lot of other things that go involved with that. I mean, it's unemployment insurance, it's licenses for software, like I said, it's all sorts of things. So you want to make sure that you know this, but you want to think about, yes, it costs money. It costs money to hire somebody. But is there a way to shift this to, it's an investment because my growth might be stalled if I don't hire this person. Or I might not be able to grab other opportunities, or we don't have capacity to continue to grow without this person. But I'm afraid to do it because it's going to cost me money. It's probably going to cost you money in the short term. It's probably going to make you more money in the long term. So again, what's the opportunity cost of waiting or not doing it at all? So you got to think through that. Another place is not investing in marketing versus, by not investing in marketing, now you have lost potential revenue, because if nobody knows you're there, they're not going to call you. They're not going to reach out. If you're not in front of them, you're not going to stay top of mind. And so that can cost you brand exposure. That can cost you lead generation. But the caveat to marketing is the strategy of marketing, because some places where you can easily spend money in marketing is not going to lead to good opportunities for you. And so you have to have a really good understanding of where your target audience is likely to be found. I know in my business, it's typically, oh, I'm going to go buy a membership at the country club, and then I'm going to be in front of all these rich people all the time, and that kind of thing. And I'm going to tell you, a lot of people waste a lot of money there. That's not something I ever thought was going to work, so I've never done it for my business because I didn't want to be another one of those advisors joining the club because you need a prospect, because everybody in the club can smell that on you, and they know that. So, maybe running newspaper ads for your business works, and maybe it doesn't. Maybe running Instagram or TikTok or any other form of social media works for you. Maybe it doesn't. Maybe you need to be on television. Maybe you need to be in print, with postcards and things like that. Maybe you need signage. Whatever is right for your business, you got to know that, and you've got to do the work to understand where is my target audience, what are they paying attention to, how do I reach them, what's it going to take for me to invest. You see what I did there? Not what is it going to cost for me to go there and try to find new clients. What do I need to invest to get the attention of the people I most want to work with? That's a different mindset. That's opportunity cost at play. So you got to think about it that way. So kind of as we head toward a wrap up here, there are some ways that you can start to get in a position to make better decisions. So the first is cash flow planning. By all means, you have to know what kind of capital you have to work with. And again, go back a couple of episodes to my conversation with Abron Villegas, where we talked about working capital. You have to know what is available for your business to invest in whatever the next thing is, so that you can make a good strategic decision. So again, if you have $50,000, what do you do with it? Well, knowing what your working capital is to start is going to help you understand how to integrate that money, because when you have an influx of cash like that, it doesn't just come in and sit in its own bucket and then go out in its own bucket. It gets integrated with everything, and then you deploy it. And often that can be the most powerful way to do it, because if you already have a reserve of capital sitting here and you have an influx that's coming in, you can put those two things together and have a bigger impact on whatever it is that you're trying to do. So the cash flow planning is helpful. You can also do a pretty straightforward, this doesn't need to be complicated and have a big, math formula behind it, but you could do an ROI, or return on investment analysis. And it can be very simple. If I pay this is what it will do. Pencil that out. Save me interest, save me a monthly payment, remove a monthly payment, whatever. Do that. Versus if I do this, I could potentially gain 2 clients, and those 2 clients are worth X. Or we can gain exposure in this marketplace, and that could be worth X over time. That's the investment part of it. Or you can say, you know what? I just am not sure, so I'm going to buy the S&P 500 index fund for the next year and let the money do what it's going to do. Or I'm going to buy a certificate of deposit at the bank and earn 4% for the next 12 months, whatever it is. Pencil that out, do an ROI. 4% sounds good, 8% sounds good, but what is it in terms of dollars and cents on the investment? What is it in terms of dollars and cents when it's spent or used to pay off debt? Do the ROI analysis. It's very important. It can be very helpful for you to understand where's the best place to go. It takes away some of that emotional, some of that gut stuff. It gives you some facts to work with. You can make more strategic decisions. And then you can use personal and business scorecards to evaluate how you've made these decisions in the past. I loved, I've done P90X twice. And one of my favorite things about that program is, Tony Horton, you got to write everything down, because how do you know what to do if you don't know what you did? Right? You have to keep score. You have to keep score with yourself. You have to keep score with your business. You have to know what you've already done so you know what to do next. And as simple as that is, I first did P90X in 2008. 2009, something like that. And it just has stuck with me all those years. So again, it's brilliant. Know what you did so you know what to do next. All right. So as a takeaway, the next time that you have to make a strategic or a financial decision, I want you to pause and I want you to ask this question. If I do this, what am I giving up? Or another way to say it, what am I giving up by doing this versus this? And start there and take the 10 minutes or the 20 minutes or the 30 minutes to invest in that decision so you make the right one. There's nothing wrong with going forward and making the wrong decision and trying again. That's how innovation happens. However, if you can pause and think and calculate quickly, you might get yourself there a little bit faster, a little bit more efficiently with a lot less pain, and maybe more profit as a result. You want to build the habit of understanding not just the price tag of the decision or the investment outlay of the decision, but you want to also think about what is the missed potential either way. So if you decide that the business needs to put the money into equipment instead of anything else over here, you know what the outlay is going to be, but you need to understand if we do this, this is going to be the outlay to buy this stuff. This is what we would miss out on if we did this other thing instead. But here's what this outlay is going to do for us. So you need to have all three parts of that equation. What's the price tag? What's the missed opportunity? And then what is the price tag or the expense or the investment do for us instead? And do that both directions. And that's going to, again, help you understand where's that money going to be best used. And then finally, you need to have a team of people around you who can help you do these things. Self-servingly, you need a great financial advisor who can not only help you do the math, but who can ask you questions that maybe you're just not thinking about or you don't want to ask yourself, or sometimes the questions are a little too close to the heart, and you need somebody to push you on some of these things. You need a good accountant, CPA, somebody who can take what you're doing with the business and help you understand the ramifications from both a tax side, from a business valuation side, even some opportunity cost things. They're going to be pretty good at that. You need a good attorney who can help you make sure that your contracts are airtight. And, you know, if you downloaded something on LegalZoom, that it actually applies to your business. You need good people around you. You need a good management team who, as the owner, you have enough honesty in the group and enough integrity in the group and enough vulnerability in the group to push each other to get better results for the team and for the business. And you need to create a space where it's okay to respectfully challenge decisions and challenge direction and challenge ideas. Because you always want the goal when you have your team of people with you. The goal is not to tear down each other or to make somebody else feel inferior or to make yourself feel smarter. The goal is for everybody to be working together to push the thing forward to make it better. If everyone's working together to make it better, it will become better. It'll become more profitable. It'll be a better enterprise, a better outcome, higher employee satisfaction, higher client satisfaction. All those things working together means more revenue to the business, ultimately more profit to the business, and that's ideal. So that's it. I hope that this kind of thought exercise through opportunity cost makes sense. If you have questions about it, or you don't have an advisor who's helping you think through these things and ask you the questions, reach out to me. Send an email to info@lifemoveswealth.com or go to lifemoveswealth.com and click the schedule time with me button. And I'd be happy to talk through any of this with you. It's important stuff. You need people with you who can help you get outside of your own head so that way you can be a little more strategic working on the business. Sometimes it's hard to be strategic when you're working in the business because when you're right here, you can't see what's happening over here. And if you can't see what I'm doing right now, put your hand in front of your face and then put your hands by your ears. And that's the difference. If you're in the business, your hands in front of your face, you can only see what's right in front of you. If you're working on the business, everything becomes visible and you can see the whole landscape. So build a team of people around you. I'd be happy to talk you through that. That's what I have for you. So until next time, go be financially awesome. Be a boss. Take care of yourself. See ya. Thanks for listening to this episode. Be sure to like, subscribe, and share. To learn more about your financial purpose, visit lifemoveswealth.com.